welcome. Patriot News Hour. Joe and Jason here on this Tuesday, the day after a dark Monday, a better Tuesday. But get ready. Volatility, I think we're going to see just a lot more. This is very reminiscent when we go back and look at when things start winding down a little bit. That's what we see, right? We see lots of volatility. The Nikkei had one of its best point days ever. I mean, still down 1,000 points between the 2 days, but I don't expect it to last. We've got a lot more to go there. Wall Street trying to recover from its day yesterday, and we had more bankruptcy filings. SunPower, they're a solar company, filed for bankruptcy today. Buca, the Italian restaurant, filed for bankruptcy yesterday. Also, Big Lots, which we've talked about Big Lots, trying to stick around here, going to shut 350 stores, so about 25%. That's kind of funny. We're starting to see a lot of these big retailers, Walgreens, CVS, now Big Lots, right? They're like, hey, we're going to get rid of 25% of our stores. We'll see if that's enough for Big Lots. I don't know if they're going to be able to work it out or not, but we also had earnings from Yum Brands today. Yum Brands, okay, that's KFC, Pizza Hut, Taco Bell. Sales were down, but prices were up, Jason. So Yum Brands saying, hey, we're going to keep our guidance, but sales are falling. And then Kellogg's announcing they're shutting one of their plants in Wichita, saying that the American consumer is just not buying cereal the way they used to. All of that and so much more. 800-951-0592. That is our toll-free number. Of course, All American Gold is the website. Get your portfolios diversified. But, Jason, yeah, volatility got to be the name of the game here. You know, you still got people, they want emergency rate cuts. It's kind of funny. I mean, I know that the jobs number wasn't great, but they still said they created 114,000 jobs, and now you got guys coming out on TV, Nobel laureates and all these other guys saying we need emergency rate cuts. I think it's a great indicator of how fragile the markets really are, that the worry is if the Fed waits for September, that the markets will have already fallen apart. And I don't even know if the data in September will be bad enough to even really warrant a rate cut in the old days, right? Now, you have to cut rates much earlier than you used to because the markets are that much more fragile than they used to be.
These stores being closed. Big Lots, for example, I don't know, that kind of reminds me of Kmart and Sears, right? Doesn't it?
Right.
There's not very many of these places left, right? You know, Big Lots was a latecomer to the whole thing, but you know, since they were new, I guess they lasted the Sears and the Kmarts of the world. But you know, I don't do Amazon very much myself. I know that if I need something from Amazon, I have somebody get it for me. But those things are taking over, Joe. And there's, you know, you can have these huge warehouse stores like Sam's Club and Costco, and there's not going to, I don't know if we're going to have department stores in the future. Everything's, then remember that cartoon Wall-E that Disney produced, you know, the little robots trying to clean up the planet Earth, you know, after some apocalyptic end, you know, it's all, you know, but, the whole world was by and large. Remember, everything was by and large. By and large, it was all one thing. It seems like we just keep moving closer and closer to that sort of thing, Joe, where there won't be any choice of stores. There'll be you walk into some warehouse store and pick up your stuff and leave, and that's going to be the only model that works because customer service and talking to an actual human seems to be going away, Joe.
Well, I'll say this. I agree that Amazon's probably changed the face of business. You know, Big Lots was more like, I don't know how to describe it, kind of one of those cleanup retailers, right, where they bought the stuff that other retailers bought, couldn't quite sell it all. Well, we'll dump it on Big Lots. But Big Lots had like almost 1,400 stores. By the time this is all said and done, they're going to be probably somewhere around 1,000, maybe even 900. We'll wait to see. But again, you throw that in with Cons and these other retailers. I mean, it's starting to get pretty big, right? You're starting to drive around and see going out of business signs and vacant signs starting to pop up. But again, all of it has been consumer driven. And then the fear yesterday, obviously yesterday, we've been talking about Japan. We know the problems there. The carry trade, it's unwinding. It's not over. We're going to see big moves like this again. But the questioning of whether the AI, deal is the real deal, or if a lot of these companies have overhyped it, that could be the final shoe to fall when it comes to Wall Street, especially if the consumer really, truly is out of money, which it kind of appears like they are. When you look at credit card delinquencies, auto loan delinquencies, you're even starting to see, now it's early, you're starting to see people not paying their mortgages. Now, maybe they got laid off. I don't know. But it's going to be the year of cash. I guess today is a nice day, because it's kind of quiet, right? You don't have a lot of economic data, and everyone's just taking a breather. 800-951-0592, Patriot Radio News Hour. Joe and Jason here on this Tuesday. The Dow's up 400. That's not bad. Down 1,100 yesterday. We'll see how it finishes. The S&P is up 70. The NASDAQ up 200 points. The 10-year note higher today. Yesterday, remember, got down to 3.7 and change. 3.86 right now on the 10-year note. We'll see how mortgage. I would imagine we'll get at least some mortgage refinancing out there for some of them that had to get those mortgages in the 7-8% range. Oil's up today about 75 cents, but still below $74. Gold right now. Gold is down right now at $25 at $23.86, and silver down a little bit, $27.02 right now. And again, Jason, we talk about the need to get more diversified as we see this bubble, right? All of these signs, we're getting more and more signs about what's happening with the debt markets all over the world. You get days like yesterday that kind of remind people, if you have $50,000 or more, you need to at least check out our friends over at YRefi. You can get up to 10.25% fixed rates of return. What does that mean? That means it doesn't change. It's the same every month. What if this happens? What if that happens? Blah, 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 blah. You don't have to worry about it. Heck, you can use it as income. I know a lot of you guys out there are looking at retirement, and you're thinking to yourself, okay, how am I going to maintain my lifestyle, right? Hey, I'm working, I make good money, we saved a lot of money, but, I don't want to blow through. I don't want to outlive, right, my money, right? Well, check out YRefi. Hey, 10.25% every year on your money is not a bad deal, right? Not a bad deal at all. InvestYRefi.com. That's the word invest, the letter Y, REFY.com. Or just, it's the easiest thing to do is just call them. 888-YRefi-24. And remember, it's not correlated to Wall Street. It's not correlated to the Fed. It doesn't care about the elections. Check them out. having said that, Jason, we got gold down today. Silver's down a little bit today, but holding these new higher highs, right? The gold market yesterday got down to like 2370 something and change, kind of right where it was the last time we got the new higher highs. Remember, talking about these higher highs that were like $100 above the old higher highs. I like it today. I like the move today. Let's test it. Let's retest it. And then we'll see where it goes from there. But the World Gold Council was out again yesterday saying, hey, I think we got a problem. The mining industry is facing difficult issues in maintaining production as gold deposits become scarcer. And the big thing they're talking about, Jason, not only is it harder to find it, it's harder to permit it, finance it, and operate it. According to the World Gold Council, they're saying that even with these record high gold prices, which they're saying, hey, produce as much as you can, all as they're seeing is these mines maybe producing some more gold, maybe producing some more silver from the mines they currently have, but they're striking out on finding new mines, and they're saying that the struggle for the mining industry is after 2008. So 2008, remember 2008, right? Gold started roaring. Here comes the financial crisis. All of a sudden, all of these countries started saying, we're not selling gold, we're buying gold. All of these mines came on board. And ever since then, there's been a stall in finding them. They're saying that there are no more large-scale mines. The amount of money the miners spend looking for new mines continues to get more and more costly. And listen, now I've always said it takes 10 years. When you find, somewhere that, they get I don't know, geologists, they send some drilling equipment out there, somewhere in the middle of nowhere. You got to remember, it's not like they're going off the 101 and the I-17 freeway and saying, hey, well, there's gold right here, and we got all the infrastructure, and we got everything that we need. No. They're in the middle of nowhere. Places where there's most likely no roads. There's no power. There's no electricity. But now the World Gold Council is saying, listen, it's going from 10 up to 20 years before these mines can even come online. And they're saying that the problem, Jason, is most of the discoveries are not deemed viable. In other words, hey, we found some gold, but gold prices would have to be $10,000 before we come out. Because in other words, the amount of gold in the ground versus how much they would have to take out, right? How much dirt, right? I don't know, ounce per ton, the tonnage, it's just not there unless the gold prices, like I said, hit $10,000 an ounce. And so, Jason, I'm going to just say this right now. The setup for gold over the next 10 years is really strong from an economic standpoint, a debt standpoint. Countries trying to diversify and say, hey, we're a good risk because we've got gold put away. You can buy our bonds. We've got some gold. We know that's good. But this report from the World Gold Council now talking about they expect gold production to fall off of a cliff with no real way for these companies to replace it. And the other problem that they're having is when they do find something that's viable, it's getting tied up in permits and the government's right there. Everybody needs a cut.
Yeah, that's interesting because, supply and demand is generally how markets work, until someone manipulates. And the pursuit to get more to increase the supply is going to be never ending, I think, in the future as things get pretty crazy economically. And it doesn't help that I saw that China's been caught misrepresenting how many tons they've been bringing in. Suddenly that someone's out there saying that they didn't count 50 extra tons that just showed up, and China doesn't want to admit that, we're not buying anymore, and apparently they are even buying more. So
it's a very interesting situation with gold and silver. By the way, silver, the same thing. Think about this, $27 silver. And some of the best mines in Mexico are having trouble with operating cost and actually being like, hey, listen, we got more silver here, but we're not going to mine more because we're not making any money at 27, right? We can't do it. We got to wait for higher prices. But the wild card here is we know now China's been manipulating. They've gotten very smart, right? So China is not waiting for the silver to be refined. It's not waiting for the silver to hit the London Metals Exchange. It's not waiting for it to hit the COMEX, because you remember, a silver contract. So when we say, hey, spot silver's $27, what does that mean? What does that mean? That means if I'm a miner, and I have 1,000 ounces of silver, and I've refined it to meet the requirements, right, which is, pure silver, 3.9 fine silver, they can get $27 an ounce today. That's what they can get, right? It's not, it's just in a bar form. And those get tracked, right? We know how much 400-ounce, gold's a 400-ounce bar, by the way, just in case you guys were curious. Those get recorded. We know how many 400-ounce gold bars, 1,000-ounce silver bars that the COMEX receives and delivers. We know how many 400-ounce gold bars and 1,000-ounce silver bars that the London Metals Exchange receives and delivers. And we also know how many China receives and delivers. So you got to remember, China doesn't export any of its gold or silver, none of it. Whatever they mine in their country, they're the largest gold miner in the world, by the way. They're not the largest silver miner in the world, but they're the largest gold miner in the world. They don't export any of it. So we know those numbers. And when we did the math, we found out when China said, hey, we took a break in May, the actual numbers said, well, wait a minute, because we know how much you got from the exchanges and you didn't account for 53 metric tons. Right? Where did it go? Right? It didn't just disappear. Right? And you got to remember, a metric ton, 32,150 ounces. You ever watch Gold Rush on TV? Parker Schnabel? Oh, God, what a great miner he is. The guy gets 7 tons out of the ground. 7. Right? He needs to have, 1, 2, 3, almost 5 years to get 1 metric ton. So just to kind of give you an idea, if any of you are Gold Rush fans out there. And what's happening in silver now, China is not waiting for the gold and silver to get to, well, at least on this side. I don't know about the gold yet. That'll be interesting. I would imagine that if they're doing it with silver, why wouldn't they be doing it with gold? They're actually buying the unrefined silver straight from the miners. In other words, hey, guys, don't bother putting it into a 1,000-ounce bar and selling it to the COMEX or selling it to London. We'll pay you. Now, here's the interesting thing. They're paying them the refined price. So, in other words, whatever they could have sold it to the COMEX or to London, China's paying for that same price, but they don't have to make it into a bar. That costs money. Right? So the miners are like, heck yeah. But, Jason, it's China's way of trying to keep the markets lower for longer. It makes a lot of sense. It's a brilliant plan. And I think this is going to be one of the things that we see as we continue to go through this bubble that we're in right now and prices continue to rise. We are going to see at some point in the very near future, I would say in the next 18 months, a major shortage in gold and silver showing up in these exchanges because China's been circumventing it and trying to keep everybody from knowing exactly how much they're actually buying.
When it comes to gold, it's not really the best thing to do to let everyone know what you have, right? That's one of the things about being private with it, right? It's an advantage.
It's just like our listeners. Hey, I don't want people to know what I'm doing. Yeah, it's exactly what's happening. Now the World Gold Council says there's no more gold. We'll be back. We're back here, 800-951-0592, Patriot Radio News Hour. Joe and Jason here on this Tuesday. So it looks like it's official. Kamala Harris has selected Tim Walz as her VP pick. He's the guy from Minnesota. Kind of interesting. I thought she would go, one of the battleground states, like Pennsylvania. Maybe, I don't know if Arizona's really a battleground state anymore, but maybe it was Mark Kelly. But the governor of Minnesota is going to be the running mate there. I don't know if that moves the needle one way or the other. Like I said, we could have like 40 states just sit out, right? Hey, California, you don't need to vote. You don't worry. You don't need Texas. You don't need to. New York, you don't need to, right? And just have those handful of states duke it out because they're the ones that are going to be deciding all of this. And it's going to be close, Jason. I will say this. I think we already are starting to hear a little bit from both sides about, hey, I want to do this. I want to cut this, right? I want to increase this. I want to spend this. Of course, what they don't say, right? They want to cut taxes and increase spending. Jason, the math doesn't work any longer. And it's going to be very interesting how this whole thing politically shakes out. I've said it for a long time. It doesn't matter which one wins. And I get some pushback on it. But what I mean is, very simply, the policies that are set forth and what needs to happen, nobody's going to do anything about it. These deficits are going to continue to skyrocket out of control. Maybe some policy at the border could be different. Maybe an Israel policy could be different or what have you. But, Jason, the overall effect of what is going to happen over the next, whoever the next president is, and the president after that, probably the one after that, it is going to be extremely painful. When we get into 2026, as an example, the Social Security, Medicare, Medicaid numbers get very ugly. They're already ugly, but they get really ugly. And then you throw in that, listen, we're in war mode, right? That doesn't look like it's stopping, right? We're in war mode. And then the interest on the debt that continues to overload. And you almost have to think that the only way forward is to, I guess, bring rates back to zero, print the money, let the inflation run wild. I mean, is that the only way forward? I don't know that the math works any other way unless you just go for the total wipeout, right? Wipe everybody out and bring in a digital currency. I think those are the only two choices we have is wipe out or we got to let it run wild, right? Let inflation go. Forget about 2%. Let's go to 4%, which means inflation's 8%. Jason, I really think whoever's elected next, that's what they're going to face.
Debt to GDP is similar now that it was after World War II, and they went into an inflation with higher rate cycle after World War II. So they're going to have sustained inflation. They're going to try to inflate their way back into whatever their new monetary system is going to be, and a sustained higher rates. That's how I see it, Joe. And I know that doesn't make sense because higher rates with inflative policies means, astronomical numbers. But I mean, if you go back to, well, let's just go back. You say it a lot. You go back to Ronald Reagan, and he was president when we got to the first $1 trillion. If you talk to those people back then and said, "Hey, by the way, in the 2020s, we're going to be at 35 to 40 trillion," they think we were nuts. There's no way that the economy can handle it. That's what they would say. There's no way that it can be handled that way. The country will break into pieces, and there won't be an America if it's 35 trillion. That's what they'd say. You tell them 35 trillion back then, Joe, they would think you're nuts. But it did it. They did it. The money's just an idea. So what's wrong with 135 trillion debt? Why not? Why not 135 trillion debt? What does it matter? Right, Joe? We'll be paying, $200,000 for a car. A house will be, $500 million.
Right.
Yeah. I mean,
right.
It's just numbers, right, Joe? It's just numbers. Just go to work, do your job, pay your taxes.
I don't think most people know that's really the only two options. There isn't a third option. It's either. Let me ask you this. Do you think Donald Trump or Kamala Harris is going to come out and say we're cutting Social Security, we're cutting Medicare and Medicaid, we're cutting defense? And what I mean by cuts, I'm not saying, hey, we're going to cut it 1% or 2%. No. Right? Unless we're willing to cut these programs by 25 and 30%, it's not doable unless you decide, let's go for inflation. And the only way it works, so think about this. We sell housing right now is back to where it was in the early 90s, okay, as far as homes being sold, right? Automobile sales, right? What are they? They're like the same as they were 10, 15 years ago, right? We're not growing the big things. What is growing? The debt, the price of everything. And here's the funny thing, though. The GDP, gosh, when I started, I don't even know what GDP was. I'd have to look. But right now, they're saying, hey, well, GDP in America, it's about $27 trillion. Right? But yet, when we look at it, look at all the bankruptcy filings, look at all these restaurants closing their doors, these stores closing their doors. No one can afford housing. No one can afford cars. We've got credit card delinquencies at the highest going back to 2011. The repo man's out in force. But the economy's $27 trillion, and that's the only way they can justify our debt being so big. So when you start looking at, well, gosh, we're going to add $3 trillion a year, $3 trillion, $4 trillion, $5 trillion. The only way it works is by saying, well, the GDP is now $35 trillion, $50 trillion, $40 trillion, 60, 70, 80, $100 trillion, which means what Jason is talking about. Could you imagine? I think it's coming. A new car, couple $100,000. Already, I mean, some places, starter homes are already $1 million. I forget in how many cities already, right? But I'm just talking about, hey, Hey, I'm going to buy a new home in Surprise, Arizona. Well, here's the surprise. It's $1 billion right now. No. I don't know. I love gold. I'm just telling you right now. Yeah. Get it? Well, you can. Patriot Radio News Hour will be back after the break. 800-951-0592, Patriot Radio News Hour. I know some people think, oh, no, that's not going to happen. That's crazy. You're crazy. Like Jason said. If you had told Larry Kudlow, God, the guy's still around, in the 1980s that the debt would be $35 trillion today, he'd be like, oh, my gosh, right? Oh, my, they couldn't handle it. He's right. He's right. You got to remember, the average house was like, what, I don't know, $30,000, right? Think about what is it now, 400 and some thousand? And the speed at what we're increasing this debt at. You know, back then, you know, oh my God, the deficit was $100 billion. And people were like, oh, well, right? I'm going to jump out of a building. Now it's $2+ trillion, and it's not even an emergency yet.
Yep.
Right? This is good times. Yeah, get ready. Get ready. By the way, I'm going to give you the special first, and then we're going to talk about the market today. $10 Liberties. Pre-1933. And of course, these are Liberties, so 1866 to 1907. Private gold. You know, kind of like China. You want to be China today? Hey, I'm going to be private. What does that mean? That means you can buy it, sell it, and trade it in any amount, and I don't have to send you a 1099. How great is that? How great is that? It's the only thing you can do it with. $1,295 today. You heard me right. $1,295. You're going to save $30 a coin on the silver side, and I love it. Silver's great too. 5-ounce silver bars. $155. Heck, silver was more than that like a week and a half ago if you do price per ounce. 5-ounce silver bars, $155. Silver Eagle, $685. Silver rounds, you want to roll around $620. So some great opportunity. Do not let this pullback pass you by here. 800-951-0592. And I know some are thinking, well, everything's okay, Joe. Because the Japanese stock market, it was down 12% yesterday. It went up 10% today, so it's got to be okay. Listen what happened. Let me give you the real facts. Japan had a big emergency meeting. The government, the Bank of Japan, all the financial guys, right? And Jason, we know what Japan does, right? They went out there, bought the market for a day to settle it down. Don't be fooled by that. I'll take here at home right now. The Dow's now only up 300 points after being down 1,100 points. The NASDAQ was down, gosh, the NASDAQ was down like 1,000 points. It's only up 200. Here in the U.S., we're getting a little more of, there's probably a lot more pain coming. Be careful here, because when you turn on the idiot box, they want you to see Japan at its best point day in blah, blah, blah time. Don't panic. Don't, just be calm. Sit there and do nothing. It's not over. This is a heavily manipulated market. And this is why I love gold so much, because really what we want what is Wall Street supposed to do? What is Japan Stock Exchange supposed to do? It's supposed to be price discovery. How much is stuff worth? Tell us. Now, Jason, these central banks, they've gotten into the game of manipulating price discovery. They don't want you to know, and that's why we have all of these crazy market moves, because sooner or later the market figures out, hey, wait a minute, this stuff really isn't worth nearly as much as they said.
No. and it comes down to the one basic thing, how much money is in your supply of money, and then once you keep printing, it just inflates things. It comes down to a very basic thing. How much money is in your system, and the more you put in there, the more of those units of money to buy whatever it is around you. They make it as confusing as they possibly could, Joe. It's like, oh, this and this is going on, and rates this and that, and it's all. No, it's how many units of money for how many people that are using it. It will cause the inflation and the market craziness. So what we got here is we've got a situation where there's just so much money floating around, Joe, and they've pushed things to a point where we do have this thing, the national debt, where we're paying interest on. And it's unsustainable. How many times everybody, oh, it's unsustainable, this can't happen. Well, it's sustainable if you just keep on adding money units. But what the trick for them is, how do we add these money units and keep it all in our pocket and keep them, the working class, the poor class, doing the work of society for the very minimal amount to keep them happy. That's the trick, right, Joe? That's where federal income tax is to keep the average guy from build his own Trump empire, right? You just keep on giving us 30, 40, 50% of everything you earn through property tax and income tax and sales tax. And meanwhile, we make sure that people that are decision makers in this system stay nice and healthy and happy, and all their friends stay happy. It's really simple, Joe, but they come up with all these terms. Was it Don King? Remember Don King? Don King, the boxing promoter, he always make up words at press conferences, and people have to be like, "What is he talking about?"
He was great at it.
The crowd had to try to decipher what he's saying. They had to follow him because is that a real word? Right? That's our economic system. They just make up words, complicate things, make you think that you should zig when you should be zagging, and all it is it all comes down to inflation, Joe. It just comes down to stealing value of your daily time, blood, sweat, and tears, Joe. You're being milked like a cow. And that's what gold and silver does. It makes you get milked a little less, doesn't it, Joe?
Well, that's what it does. It just keeps you whole, doesn't it? 800-951-0592. $10 Liberties, $1,295 today. Jason and I, we're going to wrap it up right after the break. $800-951-0592. $10 Liberties, $1,295 today. 5-ounce silver bars at $155. Rolls of silver rounds, $620. Rolls of silver eagles, $685. Again, 800-951-0592. Big Lots 8, not wasting any more time. 8 more stores in Arizona now already hit the list. So here you go. Get ready. More people going to hit the unemployment line, I guess. I don't know how it's all going to shake out. But, Jason, I was just thinking about this because I was looking at, they're like, Arizona was showing all these places that are going out of business in Arizona. Because we've got Conn's, we've got Buca, we've got Big Lots, we have Hooters. And I was thinking about Hooters. Remember, when I was in college, they had 10-cent wing night. 10 cents. You can't even get a wing. What are wings now? Like $2? Right? There's something like $2 for a wing. You get maybe that's a little buck and a half, right? A dozen wings, most places, it's like $16, $17 for wings. I mean, wings, they were like 10 cents. It was like, when you were poor, that's what you did. You went to 10-cent wing night. Yeah, now it's like, $1.50 wing night. And this is what has happened, and this is exactly what Jason and I have been talking about the whole show. The more money they print, the more they try to manipulate price discovery, Jason, the more stuff costs. It's just that simple.
Correct, and things show their true value in a accelerated inflation cycle. Your digital monkey picture on the internet, which already a lot of those got blown up in value. Those things in an inflative cycle, being a thing that you can own should go, everything should be more expensive, right? Well, the things that don't have actual value start to they don't go up with the inflation, right, Joe? Things that people think have value, certain types of cars or something. Oh, well, I got a car, it'll just go up in value. And then suddenly you have an inflative cycle, and nobody wants old collectible cars as much. They need some sort of vehicle that holds their money and goes up in value, that has a return on it, right, Joe? Something that inflates, that obviously goes up in price. I talk about copper pennies once in a while. I used to do copper pennies. Those will just keep going up. There's a little less than 3 cents of copper in each copper penny, 1982 and older. That'll keep going up. But all these other things, some of these, it's funny, collectible coins and collectible things, they don't tend to really, some of the ultra rare stuff maybe, but those things will just go down in value. And then you'll start to see people just hemorrhaging this stuff, getting rid of it, right, Joe? And this is why you want gold and silver. It's held in a nice small package. It has a lot of value to it. And if we get into an inflative cycle where it just really pushes fast, where we're seeing, Joe's wings for $16 are now going to be wings for $32, and then wings for $48. We got like a 3x increase on wings. Well, that's going to be gold at $6,000 then. That's exactly what's going to happen, Joe.
Yeah, and this is what's going to be playing out. And so the question is just going to be, how much time do we have? Don't be fooled today. Japan kind of does what they like to do, right, to calm these markets. I think we'll see if the rest of the year is going to be like last week. Remember last week I told you, hey, the markets won't even get exciting until Wednesday. Let's hope not. I kind of like today. Nice little relaxing day. $10 Liberties, $1,295. 800-951-0592. Jason and I are coming right back.